Welcome back to Investing Talk podcast. Today, we're heading straight into, well, one of the most dynamic trends currently shaping Wall Street, the crypto IPO race.
Yeah, it's definitely heating up.
We're seeing this fresh wave of cryptocurrency companies preparing for their public debut. They're aiming to follow in the successful footsteps of listings like Circle and Bullish.
Right. Big names, big expectations.
Exactly. So the big question everyone's asking is, which company will capture the market's imagination next? Our focus today is on two major contenders, Gemini and Figure. We're going to, dissect what makes each of them unique, explore their strengths, maybe confront their challenges, and analyze their potential impact on the broader market.
That's good.
Our mission is to really grasp what's at stake in this race and what it signifies for the evolving landscape of digital finance.
A lot to unpack there.
Definitely. And as always, we love hearing from you. If you find this discussion insightful, please remember to subscribe, like, and leave us a comment.
Yeah, your feedback's always great.
And if there's a specific company or, a topic you'd like us to explore in a future episode, be sure to let us know in the comments below. Okay, let's jump right into what our research revealed. It's clear crypto companies aren't just dipping their toes. They're truly igniting a wave of public offerings.
Yeah, igniting feels like the right word.
We've seen an almost frenzy around recent crypto concept stocks with these explosive first-day performances.
Absolutely, some really wild debuts.
That sets a pretty high bar for anyone looking to go public now, doesn't it?
It really does. What's truly fascinating is how those past successes have really sent investor expectations through the roof.
Right.
It signals this growing appetite on Wall Street for integrating cryptocurrency-related businesses into the mainstream financial markets.
So the demand is there.
Oh, yeah. The market is definitely looking for the next big story, and Gemini and Figure are, well, they're certainly generating that buzz.
So for you, our listener, what's truly at stake here? When we talk about them living up to this next Circle hype, what specific metrics or strategic advantages are we really looking for?
Good question.
And where do Gemini and Figure stack up initially?
Well, let's start with Gemini, maybe.
Okay, let's begin our exploration with Gemini. If it successfully lists, it will become the third cryptocurrency exchange to go public, following Coinbase and Bullish.
Right, joining some established players.
But beyond just being another exchange, what makes Gemini a unique player in this, let's face it, crowded field?
Well, the story, as many probably know, starts with its founders, the legendary twin brothers, Tyler and Cameron Winklevoss.
Oh, yes, the Winkle-Die.
Indeed. Many will remember their origins, founding ConnectU, and then that famous legal dispute with Mark Zuckerberg over Facebook.
That whole saga.
Exactly. That settlement, what was it, $65 million in cash and stock?
Yeah.
That became their launchpad into crypto.
Right.
Where they famously invested it all into Bitcoin, now reportedly holding over 70,000 Bitcoins.
70,000.
Yeah, valued at approximately $8 billion at current market prices. This isn't just a business, it's, like you said, a saga. Quite the origin story.
$8 billion from a legal settlement. Wow. Makes you wonder if we all picked the wrong college roommate, doesn't it?
Yeah, maybe.
But seriously, what's truly a fascinating wrinkle, and our research highlights this, is the Winklevoss brothers' close relationship with Trump.
Ah, yes, that's come up.
Including Bitcoin donations to his campaign and his public endorsement of Gemini at a stablecoin legislation signing. That kind of political backing isn't typical for a crypto company, is it?
Not at all.
What does that signal about Gemini's strategy?
Indeed. It adds a layer of strategic positioning that's certainly unique. It's quite interesting.
Yeah.
But at its core, Gemini established a compliance-first strategy from the very beginning.
Compliance first.
Yeah. In an industry often seen as, lacking regulation, this counter-cyclical approach is critical. They actively sought oversight. Yes. Becoming one of the first cryptocurrency exchanges to receive a trust license from the New York State Department of Financial Services back in 2015.
2015, so quite early.
Very early. And this isn't just a regulatory nod. It's seen as a gold standard endorsement. It signals robust legal operation, consumer protection.
Especially in New York.
Exactly, which is a tough market. It provides a powerful competitive edge across the industry.
So with that regulatory bedrock firmly in place, what does Gemini's actual business look like on the ground? How comprehensive is their ecosystem?
Well, Gemini has built a truly comprehensive ecosystem. The platform supports over 70 cryptocurrencies.
70, okay.
Boasts a global user base exceeding 13 million, Operates in more than 60 countries. It's got reach.
Wow, 13 million users.
And it's seen a peak asset custody scale of $50 billion USD, with a historical cumulative trading volume up to $285 billion USD.
Those are some big numbers.
Definitely. Their product line is broad, too, offering spot trading, staking, OTC, custody, credit card cash back, and even their own stablecoin, GUSD.
Right, GUSD. That's a lot of activity and a broad reach. But let's talk about their stablecoin for a sec.
Okay.
While Gemini offers it, GUSD's market share is, well, it's practically a footnote compared to titans like Tether's USDT and Circle's USDC.
Yeah, it's tiny in comparison.
Those major digital dollar equivalents really underpin much of the crypto trading world. This disparity highlights a significant challenge for Gemini, doesn't it? In diversifying revenue and establishing broader influence.
It absolutely does. It's a tough nut to crack, that stablecoin market.
And speaking of challenges, our sources describe their financial situation as being in a state of increasingly significant losses.
Yes, this is a key point for any potential investor. Gemini's core revenue model remains highly dependent on traditional trading fees.
Still fee-dependent mainly.
Right, accounting for nearly 70% of total revenue in 2024. For the year ending December 31st, 2024, they reported $142.2 million in revenue, but a net loss of $158.5 million.
Oof, bigger loss than revenue.
Yeah, and the picture intensified in the first half of 2025. $68.61 million in revenue, but a net loss soaring to $282.5 million.
Wow, doubling down on the loss.
Pretty much. Now, they've stated plans to optimize their business structure and develop non-trading related income, which is, crucial for sustainability.
Absolutely crucial. So this IPO, with Gemini still posting significant losses, it feels like a real litmus test for the market, doesn't it?
Totally.
What does it signal about the kind of investor who might be interested? And what does it tell us about Wall Street's evolving risk appetite for growth over immediate profitability in this sector?
It's essentially asking investors, are you willing to bet on future growth and regulatory stability over immediate profits in the crypto space?
High stakes question.
Exactly. The fact that Gemini is pursuing an IPO while still in a state of loss is a significant indicator of that confidence, or maybe necessity. Its successful advancement and the market's acceptance of its valuation will be an important barometer for observing the subsequent wave of listings in the cryptocurrency industry.
A bellwether, perhaps?
Could be. For you, the investor, Gemini plans to issue 16.6667 million Class A common shares with an estimated valuation of approximately $2.22 billion.
$2.2 billion valuation.
Yep. The initial offering price is expected to be between $17 and $19 per share with an expected listing date of September 12th.
Okay, September 12th. Got it. Shifting gears now, let's turn our attention to Figure. Our research refers to it as the first RWA stock that's real-world assets.
RWA, yeah. Big buzzword now.
It's a lending company built on blockchain technology, founded in 2018 by Mike Cagney, who also founded the online lending platform SoFi.
That's right. Cagney definitely brings that proven track record from SoFi.
But is the move into blockchain lending an evolution or like a completely different beast, even for an experienced founder like him?
I'd say it's absolutely an evolution, but with a revolutionary twist. Figure's core business is developing blockchain technology to facilitate lending operations. While they initially focused on home equity lines of credit, or HELOEs, their scope has expanded. Now includes cryptocurrency-backed loans and digital asset exchanges.
So broader than just HELOEs now.
Definitely. Their operational model really transcends traditional lending. It's a fintech company driven by SaaS plus blockchain technology.
Okay, walk us through the SaaS plus blockchain model and how it creates what they call a flywheel effect.
Sure.
And just for our listeners, think of RWA tokenization as making tangible assets, like property loans, digitally tradable on a blockchain. It's about unlocking liquidity and efficiency in markets traditionally, well, bogged down by bureaucracy.
Cycle, that's a great way to put it.
Yeah.
So Figure originates high-demand financial assets, primarily HELOEs, through their own lending business and also a vast network of partners.
Got it. Origination first.
Then these assets are tokenized on their proprietary Provenance blockchain.
Their own blockchain.
Yeah, Provenance. And they're marketed for sale and financing through their Figure Connect capital markets platform.
Okay, so it's all in-house, basically.
It's a closed-loop process. From asset origination to liquidity creation and diversified fee generation, it continually reinforces itself. It's designed to be a robust and efficient system that fundamentally rethinks how traditional financial assets are managed.
It sounds incredibly efficient, really clear structure. But how resilient is this flywheel against market downturns, especially if its core asset, HELCs, is tied to real estate?
That's a fair question. Resilience is key.
And how has this model performed so far? The prospectus mentioned impressive growth.
It has. Figure facilitated $5.1 billion in HELCs in 2024. That's a 51% increase from the previous year.
51% increase, wow.
And with remarkably low loan losses consistently at 1% or lower.
That's very low for lending.
It is. They even leverage AI, using OpenAI to assist in evaluating loan applications and a chatbot powered by Google Gemini.
Interesting use of AI there.
Yeah. As of June 30, 2025, their cumulative loans issued have exceeded $16 billion since launching in late 2018.
$16 billion cumulative. Okay. So beyond just the tech, what's driving this strong HELOC growth? Is it market conditions or something inherent to their model?
It's really fueled by two major market trends, I think.
Okay.
First, the general increase in property values means more home equity is available for people to tap into.
Makes sense. More equity out there.
Second, in today's high interest rate environment, many homeowners are reluctant to give up their existing low-interest mortgages, right?
Absolutely. Nobody wants to refi right now.
Exactly. So instead, they're choosing to leverage their equity through HELOAs to get funds. This provides Figure with sustained market demand, kind of regardless of new mortgage originations.
Ah, so they benefit from rate hikes in a way.
In a sense, yes. It drives demand for their specific product.
Now, this is a stark contrast to Gemini. What caught my eye is that Figure's financial situation has just turned profitable.
Yes, that's a major point.
In the first half of this year, they achieved $190 million in revenue and a net profit of $29.122 million. That's a significant turnaround from a loss in the same period last year.
Huge turnaround.
In 2024, they posted a net profit of $17.214 million after a loss in 2023. That profitability is a clear differentiator, isn't it? And a strong validation of their model.
Absolutely. This isn't just about turning a profit. It's about demonstrating the viability of their SaaS plus blockchain model in, a challenging market.
Proof of concept, really.
Exactly. And founder Mike Cagney isn't stopping at mortgages. He has this ambitious vision to create a comprehensive prime brokerage business.
Prime brokerage, like for institutions?
Yep, offering institutional investors services like securities lending. Figure even plans to allow users to lend cryptocurrencies and Figure's own shares on their blockchain, further expanding their financial ecosystem.
Lending their own shares on-chain, that's novel.
It is. It shows a real long-term strategic vision beyond just HELOCs.
Okay, and what about that key asset we keep hearing about in our sources? RWA, private credit tokenization. How does Figure dominate there?
This is where Figure truly defines the industry, or at least this niche of it. The total scale of the RWA private credit tokenization sector is approximately $29.58 billion.
Okay, almost $30 billion total market.
And Figure alone accounts for $11.6 billion of that.
Wow, that's
capturing an astounding market share of up to 40%.
40%, just Figure.
Just Figure. This dominance makes Figure almost synonymous with this growing sector. They aren't just playing in this space. They're, you could argue, a leading architect of it.
That's a powerful position.
Definitely.
So the core advantages seem clear. Leading market position, end-to-end proprietary tech, mature asset scaling, star founder experience. But no company is without challenges.
Never.
What are the key risks for our listeners to consider if they're looking at Figure?
Right, a crucial point to consider. Figure faces risks due to high business concentration and sensitivity to market volatility.
Concentration risk, okay.
They are heavily reliant on the U.S. real estate and HELOC markets, which are susceptible to fluctuations in interest rates and broader macroeconomic cycles.
Tied to the housing market cycle.
Very much so. There are also governance and reputation risks linked to founder Mike Cagney.
Ah, governance. How so?
Well, he holds approximately 90% of the voting rights through a dual-class share structure.
90% voting rights. Wow.
Yeah, it gives him significant control. And there were prior controversies from his time at SoFi that sometimes resurface.
Right, I remember some headlines there.
So these are factors any investor needs to weigh carefully.
Absolutely. For you, the listener, Figure plans to issue 26.3 million Class A common shares with an estimated valuation of approximately $3.92 billion.
Close to $4 billion valuation then.
Yeah. The initial offering price is expected to be between $18 and $20 per share with an expected listing date of September 11th.
September 11th, okay. A day before Gemini, potentially?
Interesting timing. Okay, we started by asking if Gemini or Figure could be the next circle. After our detailed look into both, what truly stands out to you? How do they measure up against that bar?
Well, if we connect this to the bigger picture, Both companies are pivotal, I think, but they represent really different stages and strategies in this race.
Different approaches.
Definitely. Gemini, with its compliance-first approach and that deep-rooted history in crypto, signifies the mainstreaming of crypto exchanges, despite its current losses.
Right. The established exchange model going public.
Exactly. Its IPO is testing the market's willingness to invest in future growth and regulatory stability, betting on the long game.
Okay. And Figure.
Figure, on the other hand, really embodies the transition of real-world assets from concept to, well, profitable reality. It's showing strong profitability and market dominance in a specific niche.
The RWA pioneer.
Kind of. Its IPO is validating a new frontier of blockchain application, proving it can be lucrative now. They're both pushing boundaries, just from different angles.
Our sources suggest that Figure's move signals the commencement of a restructuring war within a trillion-dollar market. That's a bold statement, isn't it?
It really is. It's a huge claim.
What does that imply?
It means we're not just looking at individual company listings, but potentially at a fundamental shift in how financial assets are originated, managed, and traded.
A structural shift.
Potentially. Figure's success could pave the way for numerous other RWA companies, maybe redefining traditional finance through blockchain technology. This isn't just about crypto, it's about the future of finance itself, and a reimagining of how value moves.
Fascinating implications. So whether it's Gemini navigating the complex world of crypto exchanges with that steadfast focus on compliance, or Figure leading the charge in tokenizing real-world assets and actually demonstrating impressive profitability.
Two very different stories.
Yeah, both companies offer fascinating insights into where the digital finance landscape is heading. Their individual journeys to IPO will tell us a lot about evolving investor sentiment and the deeper integration of blockchain into mainstream finance.
Absolutely. It really begs an important question for you, the listener, to consider. As this line between traditional finance and decentralized technology continues to blur, how might these types of public offerings reshape your understanding of what constitutes a valuable investment in the coming years?
That's a great question to ponder. A lot to think about. That's all for today's look into the crypto IPO race. Thank you so much for joining us.
My pleasure. Always interesting.
If you enjoyed this discussion and want more insights like these, please subscribe, like, and share your thoughts in the comments below.
Yeah, let us know what you think.
And don't forget, if there's a company you're curious about, let us know. We might just take a look into it next time.
Always looking for suggestions.
Until then, happy investing.